Hey guys, welcome back to the channel. I hope everyone is having a good weekend. So this is more of like an observational thing. It's not like a full blown analysis. This is just like things that I've noticed across like option ETFs and like their corresponding options. So I was kind of wondering, why aren't investors hedging their high yield ETFs? Again, this is not like a full-blown study. This is my observations. So why are high yielders not hedging, or maybe not hedging with options? And just as a matter of disclosure, I still have a high yield allocation, but I'm slowing down like the rate of like new buys. I don't want to like overcrowd any particular set of ETFs. So is the high yield honeymoon over? I don't think so. I think maybe like the space is still relatively new, and I think maybe we're just like working through like some of the kinks. So any screenshot that I'm providing is from mostly Fidelity Trader Active Pro, just so you know. So on the left hand side, this is like option statistics on like Tesla, and the right hand side, just for comparison, is Tesla. So as you can see, like just in terms of like total volume, even on a slow day, uh, Tesla just completely trounces like Tesla. So this is kind of like a lopsided battle, because like the total volume for Tesla is over 300K, and then like on Tesla is only like 100, which is pretty anemic. And then like you'll notice like people are doing more calls than puts for Tesla, and over on Tesla is a little bit more balanced. But I don't know if that really means anything, or because I'm trying to figure out like what's going on. And here's something interesting. Like on the sold on the bid, again, it's a little bit more balanced. But then like the sold on bid over here on Tesla is 20-0. So I'm taking it to mean that like maybe people are trying to do like maybe a covered call, and maybe they're in a rush. They don't want to like maybe put in a limit order. They're just like, oh, you know what? Let me just take whatever I can get on the bid. So I'm guessing that's what that is. Uh, so and then on the like on the bottom, the ask again. So buying on the ask means like for this particular option, like again, like people are like, you know what? Let me just like take whatever I can get. So it could be, it could just be just overthinking things. But it's just like something interesting to kind of like notice. So let's continue. So like on the YMAX, like in the past, I've tried to do like cash secured puts on this one. Um, I'm mostly successful, but like it does take a little bit of time. And the reason for that is I don't like to just like, let's say for example I'm selling a cash secured put. Um, I don't like to just like sell on the bid, because like let's see, like for example over here, if you look at the screenshot, like at this time of the of like taking the screenshot, the price was at $17.17. So for me, like I would probably try to sell like either the 17 or the 16 put. So like right over here. So you'll notice like on the 17, even though it's close, it's the one that's closest to the money. Like the bid ask differential is still 30 cent wide, which is pretty. It's not that great. And then over on the 16 put, like it's 20 by 70, which is like 50 cents. So it's kind of ridiculous. So normally what I would do, I would try to like see if I can get filled on the mid price. So for example on this one, like I'll try to see if I could sell it at like 90 cents, just to make it a little bit more fair. But that, of course, that's just me. Um, but you can like right away, like you can see like in the volume, there's actually no volume. But in the past, like it looks like people were able to successfully sell like 50, at the 17 strike. And then if you notice like the one above, I guess when YMAX was still performing relatively well, there were a lot of people that were potentially either hedging or trying to like sell a cash secure put to get it at a cheaper price. And then this is like the open interest represents the amount of like contracts that are outstanding. So they haven't closed out the positions yet, whether it's like a buyer or the sell. And then over here, like we're taking a look at FEPI as another. I would say like it's a fairly popular one amongst like a high yield community. So right now I'm showing you like their version of like the level 2 and the time and sales. So the level 2 is on the left hand side, like with the funky colors, and this shows you what could be like the bid and ask. Over the years, like the level 2 has kind of like lost down in terms of popularity, just because like over here we don't know if these are like real bids or an ask. Like, people could just be putting it out there, but they don't intend to like transact. But the closer you get to like the real price, like that's probably more intentional. So right over here, like you see kind of it's really lopsided. You have two shares at $49.16, but meanwhile on the ask side you have like 1,000 shares. So it's pretty. So it looks like people are trying to like dump shares, or it looks that's what they look like they're trying to do. Right, and over here, just on the FEPI shares itself, it's also like a 10 cent like wide on the ETF, just for like comparison to like the options. So in terms of why like people might not be using like the options as much, like the options are definitely much wider, at least so far. And then like the times of sales is just like represents like the amount of like shares that are transacted at a particular point in time at a particular price. So for example, over here, $49.25. Like it's probably like younger or new investors that are trying to pick this up like here and there. So one guy picked up like $49.25, $49.27, and so on and so forth. And these are probably like the two, I guess like maybe more established investors, or maybe it's a fund of some sort. So 1,000, at over 1,000 shares. Well, maybe it's like a like a bigger investor, because that would be like close to like $50,000. So it's kind of interesting, kind of see like how many shares get transacted, just to see like the level of that's available in the market, and then just want to go over like some anecdotal trades that I've done in the past on like select high yield ETFs. So I've done cash secure puts on XYLDs, SPYI, TSLY, and VD, and a handful of like other yield max funds. So definitely it's a lot easier to do transactions on XYLD and SPYI, just because these funds have been around longer. And then the same thing for Tesla and VD. These are kind of like the longer, like the more established yield max funds. And then like there were, I don't want to say it was easy, but I find that like the more like either the older the fund, um and the more liquid the fund, like in terms of like the ETF shares themselves. Like for example, TSLY used to do like $1 million, million shares per day, and then now like NVIDIA is kind of like the top dog. It's a little bit easier to do cash secured puts. You can do them at decent prices. Usually within 2 hours, I can get filled. But compared to like other more mainstream ETFs, it's definitely not acceptable when you compare it that way. I'm just saying for like these high yield ETFs, since they're generally newer, they they don't get like the same amount of like volume and action. And then some of the other like high yield ETFs can actually take days. Like I just set it at a limit order. I don't want to like get filled at bad prices. I'm willing to wait. But for some people that might not be acceptable. So just something to keep in mind. And just for comparison, for the triple, like if you use like the like a big guy like the triple Q, plenty of liquidity in terms of shares, and then also plenty of liquidity in like different option chains in general. So just for example, I'm just picking like the October 455 put. Like this little guy in the left is from like the Schwab Thinkorswim, because I just want to do like a comparison of like the different platforms, just to kind of kill two birds with one stone. So you can see like it gets pretty active in terms of like the time of sales. And then over on like the Fidelity side, sometimes Fidelity isn't perfect. I'm finding out like the hard way. So this first screenshot, like you see like when there's actually no time in sales, and then like I kind of just I thought that was weird because you have bid and ask, so how can you not have time in sales of like actual transactions? But then like I waited a bit, and then like finally like some of the quotes started filling in. So I don't know if it's like a internet connection or if it's just something on their end. But it's good to like just verify these things. And then just to kind of show you like how bad some of the options can be on like the high yield ETFs. Like I'm just for example, just taking Ulti. So just like if I wanted to do like a cash secure put on like the October 10th put, it's like crickets. There's like nothing happening over here. Like because I thought, oh, okay, so maybe it's just like another maybe it was like an internet thing, maybe it's a Fidelity glitch. So I checked both Fidelity and Toss, and it truly is like there's no there's no action. So sometimes you just have to be careful if you want to just want to do something similar to what I'm doing, which is either sell a cash secured put, or maybe you already have some high yield ETFs and you want to do like a covered call just to bring in like just a little bit more premium that way. That's perfectly fine too. But sometimes like you know the the volume just isn't there, unfortunately, which is kind of a shame. In terms of like why should we care? Now, some of you might have like a smaller account, so if you're wondering, that that's perfectly fine. But as your account size gets bigger, and then sometimes as the yields get compressed all around, you want to try to start thinking about ways to how to generate, you know, some additional premium, just in case like something bad happens and you want to like either hedge yourself, or maybe you just need like a squeeze out a little, a few more dollars of like premium here and there, and it could potentially add up. And then also like because like for example with the QDT, even for like a well-run high yield ETF, sometimes like you kind of have to deal with tourists. You can either wait them out, or you could just, well, I don't have to like buy right away. I can just like do a cash secured put, collect some premium up front, and then maybe wait it out and then see what could happen. Maybe the ETF will kind of rebalance itself out, but just in case it doesn't, at least you have like some extra premium that you've that could have gone to waste, like if you didn't like sell it. And then some of these ETFs, it does take some time to get filled at a fair price. So just to kind of like recap, some investors might not have enough money or shares to do option transactions, because like in order to do a either a covered call or a cash secured put, you need to have enough money for like 100 shares. So some of the bigger ones, like say like FEPI, it's around like maybe like the 50 ish dollar mark. So that to take out to like $5,000 in buying power, and some people might not have that. And then other, like maybe you're just happen to be starting and you're buying whatever you have, putting like a small amount in your paycheck into these things. So you might have like odd number of shares, so it might be like 73 or 84 or 123 or something like that. So if you have like at least 100, you could start doing like covered calls, just so you know. And then some people might be discouraged by wide spreads and low liquidity. Unfortunately, like folks like you and I, that are maybe like pioneers in the high yield ETF space, unfortunately, that's what happens. Someone has to step up to kind of like do these transactions, because remember, market makers aren't in the business of, they're not a charity. They have to see like some type of volume. So until like enough of us like step up to kind of like pull our resources and talent to kind of maybe start pushing for more of these transactions to happen, they're gonna get pretty wide spreads. And then another thing is that like some people might not be aware just in general, and maybe they're just using like the inverse ETFs just as a matter of convenience, and that's fine too. I just feel like if there's option chains available, why not make use of it? And then just in general, like Another thing is that, like, since the markets have been a little bit rocky in like August and early September, I wonder if people are maybe paralyzed by fear. But I don't think it's that bad, but it could just be like an experience thing too. So of course, this is just like more of a opinion and just like an observation. Just in general, please stay on top of your investments and your hedges. So thank you for watching. Hope you can like and subscribe. And I'll see you in the next video. Bye now.